Radio.
Hello, everyone. Welcome to another episode of the Aftershock, where we give you the latest and greatest in all things Web3 and things happening in NFTs and the metaverse. Now, the last week has been extremely wild, and there's several things to cover. But first, I want to say, if you're over on YouTube, please make sure you give us a like and subscribe if you enjoy our comment. Leave us some comments if you enjoy information that we're giving or anything else that you want to share with us. And then, of course, if you're on our podcast, please make sure to give us a share and also go and leave us a nice 5-star review whenever you get the chance. So now, without further ado, we are going to get into this week's Aftershock.
The Aftershock.
All right, so we got to start with the doozy of what's going on. So Silicon Valley Bank collapsed. So over the last week, a lot of things happened in succession. First, last week we reported on Silvergate starting to have some challenges. It ultimately collapsed, went under. Shortly after, you had this bank now go under, which was very unfortunate. Silicon Valley Bank, which hosts a lot of regular Web 2.0 VCs. So of the amount of money that it had in its reserves, only about 3% are FDIC insured, which means that, the $250,000 that the federal government insures up to depositors, only 3% of those people were covered. So 97% had more than that amount in there, which was huge news and kind of sent not only the traditional markets in a free fall, but also was a huge risk for USDC as it got depegged, because it came out that SVB had a certain amount, USDC had a certain amount of their money in SVB, roughly $3 billion. So that caused USDC to depeg. And as soon as that started to happen, you saw the entire crypto market kind of go in a free fall down over the last week. Now, as that happened over the weekend, institutions like Coinbase stopped all of USDC trading until Monday. And what the FDIC happened, they came in and they restructured over the weekend and basically stopped the free fall that was happening in both the traditional markets and the crypto markets, and got USDC in a stable place to where they no longer have that for $3 billion loss on the books. They are now covered. And what you saw in response to that was an absolute short squeeze happen in the market. We saw Bitcoin go all the way down to 20,000, all the way back up to 24,300, Ethereum going back up to 1,700, and so on and so forth. Now, time will tell if this can be a sustained move and if we're really starting to see a real bullish move, or if this was truly just a short squeeze. But something here that I do really want to spend some time on is showing the importance of some centralization in monetary systems. And hear me out on this, to all you hardcore decentralized people out there. Why did UST fail? So Terra Luna, when the UST depegged, it went into a free fall and there was a run on the bank. And once that happened, it basically virtually became nothing. USDC had a chance to do that, but what happened? Things got paused over the weekend. Crypto usually doesn't stop. It's 24/7. It keeps going. But in this scenario, transactions really got to get halted throughout the weekend while the dust settled and everything got figured out. And that alone helped USDC have enough time to figure things out, get back pegged, and not have a gigantic run on the USDC bank, because that would have been extremely detrimental to the entire crypto market. So again, as it relates to the monetary system, some centralization can be good, especially as it relates to protecting downside. So this is an example of when it worked out. So we had to start at the top of the hour there, and it's great to see USDC be able to stand up. Terrible to see SVB fail, unfortunately, as a lot of VCs, startups, unfortunately, are not going to see all their money necessarily come back. And this is also the second largest bank to ever fail, period. since 2008, which is pretty wild to see. And you even have other banks in the traditional world over in the US that are failing as well. And this could keep causing more dominoes, more other banks to be failing over the next week. So keep your eyes on that. But we got to start at the top of the hour there. So again, our next article, we're going to be looking at USDC as it regained its dollar peg after it said it had its $3.3 billion with SVB. So I kind of talked about this just a moment ago, but basically the USDC is a type of stable coin that's pegged to the US dollar. And after last week, it said it had 3.3 billion of its cash reserve at SVB. The USDC lost its peg. It was falling as low as 86 cents on Saturday. And then Circle holds about 9.7 billion in cash. 5.4 billion of that is now held by BNY Mellon. So we have to keep watching to see what happens with this. It's crazy to think that USDT, Tether, was more stable than USDC at one point, especially old things on Twitter. Crypto Twitter was very active and showed things when Coinbase was saying that USDC was more stable than Tether and was making everyone get out of their Tether over into USDC. While that this has only happened in a short amount of months, but here we are. And I'm sure even more is going to come out with it. Our third article is going to be looking at Facebook. So Facebook's parent company, Meta, is exploring a decentralized app. So the app's going to be a standalone product for sharing text updates. And the news was first reported by Indian business news site Money Control. We believe there's an opportunity to separate space where creators and public figures can share time updates about their interest, a Meta spokesperson said. And the app, whose code name is P92, is still under development. It's going to allow users to log on using their credentials for Instagram, the photo sharing social media site, also owned by Meta. So again, a large amount of Web 2 companies are continuing to build on Web 3.0 and are trying to get their foothold into social media as it goes into that direction. So Meta's going to continue to pour money on this, and I think other companies will do the same. Our next article looks at Nigerian president-elect aiming to use blockchain technology in the banking sector. So the Nigerian president-elect wants to review existing SEC digital asset regulations to stimulate economic growth. And the way that he is going to do that was through a manifesto that he released that, if implemented, would enable the blockchain technology and cryptocurrencies in the nation's banking and finance sector. The manifesto suggested reviewing existing Nigerian SEC regulations on digital assets to make them more business friendly. So the suggested regulations would require digital asset companies to register with the SEC and mandate all digital asset offerings and investments comply with SEC regulations. So more and more companies are trying to find ways to make cryptocurrency a feasible path to improving their financial systems. I think these will be great case studies to observe how this can be used, not necessarily properly or the best or most efficiently, but we're getting real use cases out there. And as the market continues to mature and have more ways that, and lessons that can be taken away from these different economies truly going all in on cryptocurrencies, the better it's going to be ultimately for the entire world embracing crypto. Our next article is looking at the judge mulling over removing Shaq and Naomi Osaka from FTX lawsuits. So the plaintiffs have until December to show cause as to why the two sports stars should not be dismissed from the lawsuit. So in a paperless order, the U.S. District Judge Kevin Moore instructed the plaintiffs to provide cause on why Shaquille O'Neal and Osaka shouldn't be dismissed from the suit. According to Moore, whether the two sports stars have been served is unclear. The judge gave FTX customers until December to show cause. The order was one of several the judge issued on March 9th, In another order, Moore reprimanded other celebrity defendants for requesting to push back a scheduled conference without following the proper steps. These celebrity defendants, including Tom Brady, Giselle Bündchen, Kevin O'Leary, David Ortiz, Trevor Lawrence, asked for time extension. Now, again, from this FTX whole breakdown, there are a lot of major figures out in the world that backed it through commercials, through endorsements, other things. And so they're trying to get removed from it and are legally trying to put things out there to try to distance themselves from this impending lawsuit. Good luck to Shaq. Good luck to Osaka. Time will tell where this pans out, but this is such an interesting debate on whether these celebrities should be held responsible for people who invested. I will reserve that for conversation for another day, but I think that judges deciding whether or not they should be allowed to be prosecuted or not is in itself going to set the stage for what could happen to other celebrities in the future who unfortunately make not great decisions on which crypto projects to back. Next, we're looking at Hedera. As Hedera confirms, exploit on mainnet led to theft of service tokens. So Hedera, the team behind distributed ledger Hedera Hashgraph, has confirmed a smart contract exploit on the Hedera mainnet that led to the theft of several liquidity pool tokens. Hedera said that the attacker targeted liquidity pool tokens on decentralized exchanges that derived its code from Uniswap v2 on Ethereum, which was ported over to use Hedera token services. The Hedera team explained that the suspicious activity was detected when an attacker attempted to move the stolen tokens across Hashport Bridge, which consists of liquidity pool tokens on SaucerSwap, Pangolian, and HeliSwap. However, the operators then acted promptly to temporarily pause the bridge. Hackers are going to hack, and unfortunately, when you look at a lot of exploitations across a lot of these different ecosystems, they're happening on DEXs and bridges. So continue to be as safe as you can, as a lot of these different hackers are going to try to find a way to get access to liquidity and get as much money as they can. The final article is going to be looking at crypto GBT Twitter accounts spring up as hashtag trends on Twitter. So dozens of Twitter accounts have emerged on social media platform claiming to be related to crypto GBT. The hashtag related to a perpetuated artificial intelligence crypto token called crypto GBT has been trending on Twitter. Alongside it, a number of very similar looking Twitter accounts have sprung up, some of which have been touting likely fake giveaways. At the time of this writing, download crypto GPT was trending. 6,185 tweets. Now, the reason we bring this up is because if anyone here has spent time with ChatGPT, which is an open AI system that is extremely powerful and really cool to see, people trend to jump on trends. And by creating something within Twitter that can kind of act along the same lines, people built the hype. And these are all essentially how meme coins are created. So this is one that kind of came out of nowhere. One that I'm going to be watching pretty closely, and something that you might want to look at on your own radar as well. So that's going to wrap it for this week's Aftershock. I hope you enjoyed all the articles. Again, if you like what we had to say, please make sure to like and subscribe or to leave us a nice review. And if you have any feedback for us, make sure to leave us some comments or to go check out our website at crypto-current.co. Hope you enjoyed all the content for this week. And as always, I hope you stay cryptocurrent.
Thank you for joining us for another episode of Cryptocurrent. Cryptocurrent is a cryptocurrency and blockchain education platform that's bridging the gap between the curious newcomers who are just discovering the space and the thought leaders who are shaping its future. All opinions expressed by Richard Carthon, the Cryptocurrent team, and their guests on this show are exclusively their own opinions. This show and any other Cryptocurrent production is exclusively for informational purposes.